Hello everyone, it's Cheetah, your residential mortgage broker, here to help clarify the difference between the key interest rate set by the Bank of Canada and the prime rate that is part of the variable interest rate mortgage and lines of credits for consumers. So the recent rate announcement by the Bank of Canada dropped the key interest rate by 0.25%, so now it is 4.5%. So this 4.5% is also called the overnight rate as well as the policy rate because it is the interest rate that the banks borrow from our central bank, Bank of Canada. For the consumers, the prime rate is set by the banks, and currently the prime rate is a 2.2% margin on top of the key rate, so it's at 6.7%. This prime rate is part of the variable mortgage as well as lines of credits. So when the Bank of Canada announces an increase or a decrease, typically the banks will also increase and decrease based on the amount that the Bank of Canada has set. So the consumers pay a different interest rates from what the banks pay that's set by Bank of Canada. So when we are discussing the difference between key rate, overnight, or policy rate, that is different from the prime rate that the consumers end up paying for their mortgage and lines of credits. So